Hi friends and traders, welcome to Trending Sutra. My name is Amit and let's start our weekly technical update on the market. So this week, very interesting thing happened. We have a Nifty losing approximately 255 points in the index, whereas BankNifty losing 486 points, and Nifty Financial lost by 231 points. In the DIA data, FII remained negative with minus 1,832 crore, whereas DIA remained positive with 1990 crore. Net effectively 86.81 crore was the net buying in the cash stocks. In the gainers and losers for the Nifty, top losers remain ICICI Bank, Reliance, Infi, ITC, Asian Paint, TCS, and Titan as the name few. Whereas the contributor side on the positive side, Bajaj Finance, ONGC, IndusInd Bank, Tata Motors, L&T, and Pharma remain the net contributor on the buyer side. So, if we talk about Nifty index, on the performance wise, 10 stocks close positive on week to week basis, whereas minus 40 stocks close in the negative. Positive contributor remained 23.98 points, whereas the negative contributor remained negative around 254 points. So in the spot Nifty, approximately minus 230 points was as the net contributor. Technically, if we see and look at the market, where market is hitting on the chart. So Nifty on a week-to-week basis has approximately, see a reversal exactly from 19,000. Whereas if we talk about on the technical, this rejection on the upper range where the market was quite nervous around 19,000 is actually has shown a correction of more than 500 points from its recent high of 18,820, and approximately what we were expecting that this gap should be filled, so it is actually filled on Friday, and now the next gap is approximately around 18,100 or 18,030. So this probably will be the next ideally target on the downside in the index that we are expecting, if until unless 18,600 or 18,530 is not broken on the upside. That is what we are expecting on the Nifty. If we see, Nifty has so far, performed approximately 6% gain as we are closing in December. So far, Nifty has performed by approximately 6%, whereas Bank Nifty has gained by approximately 24.297%. So Bank Nifty this year has been a very consistent outperformer. Not only outperformer, it has beaten Nifty by approximately more than 16% in the net gains. Coming back to onto the weekly setup, Bank Nifty from its recent high fell approximately 1,000 point in the previous week, but somehow this after filling this, when this support is quite interesting around 43,100 and 43,200, where we have seen a multiple support in the entire December month, and from the third week of the November and till date, 43,200 remain a very strong support in the Bank Nifty. So until unless 43,200 is broken on the closing basis, and then 43,000 is not broken, then we expect that Bank Nifty may not see a very bigger fall. But if it breaks, then obviously we are expecting that approximately 42,700 to 42,800 is exactly on the chart, or max to max 42,500 in the next week. Coming back to the market conditions. So in the option market, Nifty on a weekly basis has built a very strong position around 18,400 on the call side, whereas on the put side, 18,000 has seen very aggressive writing. 18,300 build approximately 21 lakh, and 18,100 build approximately 20 lakh. So market is, we can assume that market is comfortable around 18,100 to 18,000, whereas the nervousness could be seen in 18,300 if we have a gap down on the Monday, because the call ladder has shifted from now has shifted to 18,300 and very quite aggressively on 18,400 and comfortable at 18,500. So as long as 18,500 is not revisiting in the Nifty index, the downside risks remain on the remain quite high. But since we have closed all the events and everything, so probably much more consolidation is likely to happen. And between 18,100 to 18,500, the next expiry is more likely to happen in the Nifty. If we talk about Bank Nifty aggressively, the put writer has shifted towards 43,000, and now aggressive call lighting we have seen. And put writing is also visible around 43,200, and considering the data along 43,200 to 43,500, market is quite comfortable around 43,000 on the downside and 43,700 on the upside. And further consolidation can be expected between these level of 500 to 600 points in the next weekly expiry in the absence of any major data in the upcoming holiday season. Coming back to some more data, globally, we have seen how S&P has performed in last week. S&P has closed -2%, whereas Nasdaq closed by -2.8% and Dow Jones closed by -2%. In the last 3 months, the index, especially Dow Jones, has given positive return of 7%, whereas S&P and Nasdaq both are in, posted negative returns. In 6 months, if we see, there are very marginal gains in S&P and Nasdaq also, whereas Dow still remain on the positive side. Year till date, if we see, all the three major indices in the US comes into negative. So exactly what happened in the market in last 5 days or in the last week, after Fed increased the interest rate by 50 basis point, which was quite expected, ECB also raised the interest rate by 50 basis point, which was also quite expected, and Bank of England also raised by 50 basis point and increased their inflation concern. So all the three major central banks have raised their interest rate simultaneously. And despite there is some cool down in the inflation number, the commentary and the forecast for the next year and for upcoming time period is quite hawkish. What market was actually expecting and why market actually rallied in last 1 month and 2 months from the bottoms is because of this particular expectation, especially from the October month of inflation data. After that, the market started railing across the globe. So that really actually is got halted in India also and globally also. Further hawkishness can be continued if and particularly if the inflation figures does not come below 5.5 or 5 in the US, and UK is also having a very serious problem on the inflation front. So inflation remain a very major concern in the market, and because of the rate hikes across the globe, this liquidity tightening is going to hurt growth like stocks like an industry like IT, and especially the kind of cost we are what we are understanding from the market, especially slow down into stocks like Tesla, Apple, Microsoft. So across the globe, all that post or like pre-COVID, the post-COVID really what we have seen in the IT stocks is, and due to the higher valuation, all this really and all this valuation is now getting hammered and getting further correct. So this is one of the reasons why Nasdaq, S&P are underperforming, and our market what we are expecting that in the short term definitely it will see that effect. But coming week we expect only consolidation and further consolidation likely to happen. As we said, on the trading ideas, we are expecting that Nifty should find support around 18,170 or 18,200. on the downside, and it may find some resistance around 18,550 to 18,600. That should be the broader range. Again, the Bank Nifty 43,000 to 42,900 on the downside, and 43,700 to 43,800 on the upside. That could be the likely range. That's the wrap up for our weekly update. Kindly like this video, share this, subscribe this. We will be likely to come with our more updates on the market in the coming week and on the daily basis. Thank you for watching. Thank you.